Hey everybody, Joshua Phillips here with Churchill Mortgage coming to you with another market update. Got a little bit of good news on mortgage rates and the trend that we're seeing right now. But hey, can you believe that almost 2 months are over? I was talking to my wife earlier on the phone. I said, we're almost through February, 2 months over for the whole year. It's amazing how fast it goes. But hey, we're only about 2 weeks away from the time change. We're going to start seeing more sun, more warm weather. Hang in there, but that also means home buying season's coming. So if you're looking to buy this spring or summer, it's time to get ready. Well, anyway, let's get to the market update today. And we're going to start here, as we always like to do, on CNBC. And today, boy, it's kind of a wild market. We're seeing the Dow down 700 points, worst day of 2025 over economic growth. And honestly, that's having kind of a positive effect. We'll often look at the 10-year Treasury yield. In fact, I think that's something you can always keep an eye on. Personally, if you want to keep an eye on what you think mortgage rates are doing, keep an eye on the 10-year Treasury yield. We want to see it going down. And we've been seeing it going down. I think it reached about 4.7 a little bit earlier this year. We're coming down. Keep in mind, last September, we got to about 3.6, which would really be a great spot, especially if you're looking at refinancing. We want to see that 10-year Treasury yield down in the threes, 3.6, 3.5, I think would be a good spot to start looking at refinancing. We're probably a good long ways away from that, but just looking ahead. So let's jump over here to our mortgage-backed security chart that we always like to take a look at. Let's pull in here to a 3-month chart. And so if you've been following this before, what I always say is this is a mortgage-backed security chart. These are Japanese candlesticks. Ask ChatGPT if you need a little more information on that. It's a great way to look at markets, stock markets, all sorts of markets, is using Japanese candlesticks. And this is mortgage-backed securities where mortgage rates most directly derive their value. Mortgages are bundled and sold as securities into the marketplace, and that is how mortgage rates are most directly set. So this is what every professional mortgage loan officer in America looks at. I always say we keep it up on our screen all day, every day. We're watching this screen. So all you need to know really in this, we want to see the security price go up. The higher the security price, the better mortgage rates are doing. And of course, the lower the security price, the worse rates are doing. Green is good, red is bad. That's really what you need to know. And I always love these charts because it's kind of like a picture's worth 1,000 words. And it really tells you what's going on. So if you just look in the short term here, we kind of saw the worst rates really in about 8 months back about 5 weeks ago. And that was when rates were kind of at their worst levels in quite a long time. But hey, we've been starting to climb our way back out of it, and we are seeing mortgage rates on a improving trend, which is great. We are probably 0.3% better than we were 5 weeks ago. So we are definitely moving currently in the right direction. And if you want to go a little bit deeper with this, we always look at what's called the moving averages, the daily moving averages you'll see here on my screen, 200-day, 100-day, 50-day, 25-day. These moving averages are good indicators as to what's happening. And the great part about what I'm seeing in these charts is that we've broken above all the moving averages. When we're below the moving averages, we call that a ceiling of resistance. When we're above it, we call it a floor of support. All to say, that is good news. Let's pull out here. Let's go ahead and pull out here to a 1-year chart. I always like to take a little bit longer view. In fact, let's pull out here to let's go crazy and pull out to a 2-year chart. So we can see here a couple years ago, 2023, rough year. We saw mortgage rates getting worse and worse and worse. We were seeing in the fall of 2023, mortgage rates reaching over 8%. And then we saw mortgage rates start to improve through the end of the year. We came into last year with mortgage rates pretty good. We were back around maybe 7%, something like that. And then last year, man, we just kind of meandered. Low sevens was kind of maybe upper sixes was kind of what last year was. Not a huge movement if you look at all of last year. But we did later in last year, coming into the fall, we saw mortgage rates reach their best levels in a couple of years. We talked about the 10-year Treasury yield going to 3.6%. So that's where we were. Then we've seen mortgage rates, again, get worse. And now we're a little bit on an uptrend. again. So just to give you some perspective, I mean, if you look at the last, 15 months, really rates haven't moved more than about maybe 0.75% up and down, from the sevens and sixes basically, is what we've been looking at. So let's pull back here to the 1 year chart. So we kind of bottomed out again back about 5 weeks ago. Again, we're on a positive trend. We're still about 0.5% higher in interest rate versus where we were last September. So we've got a lot of ground to make up. We're even, maybe a 0.25% higher than where we were just back in early December. So we've got, again, some ways to go. But hey, I will take it. We are on a positive trend. We've seen rates bounce about 0.3% in the last 5 weeks. That is good news. And we just want to see that news continue. Now, what happens next, we never know. It all depends on the latest economic news. There's a lot still happening. I think Trump's been in office about a month now. And, we're still shaking things up. And we'll see how that affects interest rates as the economy continues to unfold with what's happening this year. So listen, if you want to talk about your specific situation, specific interest rates, paying points, things like that, or you want to work on getting pre-approved, I'm certainly here to help you. This goes out to my wife, Amy. She's a loan officer as well here at Churchill Mortgage. I know it goes out to her clients as well. She's great. She's here to help you as well. But anything we can do to be of assistance to you, we are here for you as we move into the spring buying season. All right, take care. 2 more weeks till a lot more sunshine and a lot more warm weather. Take care. Bye-bye.